Most people guess their emergency fund number and either oversave or come up short. Here are the 5 things that matter. A real emergency fund target comes from your actual expenses and access, not a catchy rule. The months of expenses idea works only if it's based on what you must pay, not your income, or what your friends saved. Credit cards are not an emergency fund because limits can be cut and interest starts fast. Timing matters too. If your money takes 5 days to transfer, that's a problem. And fees matter because one overdraft can snowball into more. Build your emergency fund around the most common big shock, losing income. That's why you base the number on needs. Housing, food, utilities, minimum debt payments, not on your normal lifestyle. Also include insurance premiums, because missing one payment can cancel coverage right when you need it. Plan for the out-of-pocket hit on medical care, like a deductible that can easily be $1,500 to $5,000. A strong buffer also prevents an overdraft cascade of $35 fees. Keep the money fast access because emergencies don't wait. The clean way to pick your number is to start with one must-pay month, then add months based on risk. If your income is stable, 3 months of needs is a solid standard. If your income is variable, 6 months or more gives you room for slow months and surprise bills. If you're a one-income household, add extra months because there's no second paycheck to absorb a hit. If your job is hard to replace, plan for 9 to 12 months. The more rigid your bills are, the bigger the buffer should be. You don't need the perfect number on day one. You need tiers you can actually reach. Start with a starter buffer of $500 to $1,000 so a flat tire or ER copay doesn't go on a card. Next, aim for 1 month of bills because that buys you breathing room instantly. 3 months is the standard tier for most steady situations, while 6 months fits higher risk income or bigger dependence. If you have high fixed costs, 9 to 12 months can be reasonable. Keep it accessible, not locked in a CD with penalties. An emergency fund only works if it's separated and reachable in the real world. Keeping it in a separate account reduces accidental spending because it's not mixed with your checking balance. Make sure your access rails are fast. Cash withdrawal, debit access, or quick transfers so you can pay today, not next week. Avoid setups that require wire-only access, since wires can cost $15 to $30 and aren't always same day. Confirm any withdrawal or transfer caps, and verify FDIC coverage up to $250,000 per depositor per bank. And don't rely on overdraft as your backup plan because fees stack fast. If your income is stable, 3 months of needs is a solid target. If it's variable, start thinking 6 plus. BankingHub can match you to accounts based on how you actually bank and show the real dollar impact for your balance. Free, takes 2 minutes, and the link is in the description.